About freelancers. Tax hacks that save £5,000 sterling annually in 2026. Right, listen. If you're a UK freelancer right now, you're literally leaving thousands of pounds on the table every single year. I'm talking 2 to 5 grand just evaporating into the taxman's pockets when you could be keeping it yourself. And the wild part, most of you don't even know it's happening because the tools to fix this have literally just become accessible in the last few months. I'm showing you exactly how today with a live calculator walkthrough that'll blow your mind. So stick around because in the next 15 minutes I'm going to show you 4 specific AI-powered strategies that are already saving my freelancer friends between £2,000 and £5,000 annually, and honestly, some of them are hitting even higher. Most of you don't even know it's happening because the tools to fix this have literally just become accessible in the last few months. I'm showing you exactly how today with a live calculator walkthrough that'll blow your mind. I've got case studies, I've got real numbers, and I've got a calculator you can use right now. Let's go. The reason I'm making this video is because I just finished talking to about 30 freelancers across the UK, and 90% of them told me the same thing. They're paying accountants between 400 and 800 quid a year, and they're still getting things wrong. They're still overpaying their tax. And the accountants aren't doing it out of malice, right? They're just working with outdated processes and spreadsheets that haven't been updated since like 2015. But here's what's changed. IE tools have gotten so accurate at understanding the UK tax code that you can now basically outsource your tax optimization to software that actually understands the nuances way better than most accountants do. I'm not saying fire your accountant tomorrow, but I am saying you need to be proactive. And this video is going to show you exactly how. The first strategy is something I call intelligent expense categorization. And it's genuinely mind-blowing how much money people leave on the table here. See, most freelancers think they can only claim actual business expenses. That's it. They buy a laptop, boom, they claim it. They buy office supplies, they claim it. But the UK tax code is way more generous than that, and most people don't understand it. Let me give you a real example. I know this guy called Marcus, who's a graphic designer based in Manchester. He was claiming about £8,000 worth of expenses annually. Pretty solid, right? Standard freelancer. We ran his business through an AI expense analyzer, and you know what we found? He was missing about £4,000 worth of legitimate expenses. 4 grand. And where was this money hiding? First, he was paying 50 quid a month for Spotify because he worked with music on and off. He wasn't claiming it because he thought it wasn't business related. Wrong. Proportional home office costs included the electricity that powered his equipment, the internet, the rent attributed to his workspace. He was trying to claim a flat rate, which is suboptimal. The AI tool actually calculated his square footage, his actual utility bills, and found he could claim an extra 200 quid annually by doing it properly. Then there's the big one nobody talks about. Professional development is Marcus was doing online courses, buying design books, subscribing to Adobe Creative Cloud, but he wasn't documenting them properly. The AI system has him structured everything, linked it to his service offerings, and suddenly he had another 1,000 quid in legitimate claims he hadn't realized were available. Here's how you do this yourself. You go to tools like Receipt Bank, or you can use OpenAI's GPT-4 with some specific prompting to analyze your expense receipt. You literally take a picture of every receipt, upload it, and the AI categorizes it and flags whether it's claimable and how. For Marcus, this revealed about £2,000 annually in unclaimed expenses, which at his 40% tax rate meant saving him about 800 quid on tax. But there's more. The AI tools are now smart enough to understand timing. If you know you're going to go over the personal allowance this year, you can use tools like TaxFile or FreeAgent with AI integration to recommend adjusting your expense claims or timing your invoicing to minimize tax liability. It's not dodgy. It's just smart. One freelancer I know, Sarah, a copywriter from London, spread her annual payment across 13 months instead of 12 to hit a lower tax bracket. That one move saved her 400 quid. The second strategy is automating your corporation tax planning. And this is where it gets really interesting, because most freelancers operate as sole traders, but some of you should actually be operating as limited companies. And the AI tools now run the calculation better than accountants. Z, if you're earning above £50,000 a year as a freelancer, you might actually pay less tax as a limited company. Sounds obvious, but here's the thing most people don't understand. You take a salary up to the personal allowance, which in 2026 is about 12 grand, so you pay no income tax on that. The rest you take as dividends, which are taxed at a much lower rate than income tax, especially if you've got a corporation tax allowance that you're using. You follow me? Let me break this down with actual numbers, because it's the only way this makes sense. Let's say you're a freelancer earning £70,000 annually. If you're a sole trader, you're paying income tax at 20%, plus national insurance at 9% on the profit over the personal allowance. That's roughly 29% effective tax rate, bringing you down to about 49 grand after tax. But if you operated as a limited company and took a salary of 12 grand and dividends of 58 grand, you'd pay corporation tax at 19% on the company profit, which is about 11 grand. Then the dividends are taxed at 8.5%. Suddenly, you're looking at paying about 14 grand total in tax and keeping 56 grand. That's a 2 grand difference, and that's just on 70 grand revenue. The problem is, historically, accountants charge you 1,000 quid to set up a company and then another 500 a year to run the accounts. So a lot of freelancers don't bother. But now you've got a powered accountancy platform, Regent, Sarah, with AI add-ons Wave. They can automatically make these calculations and flag when you're better off as a company. I know a guy called James who was a freelance web developer earning 85 grand. His accountant had kept him as a sole trader for 7 years. 7 years. An AI tax analyzer looked at his numbers and found he could be as a limited company, and immediately his annual tax bill dropped by 3 grand. 3 grand a year. He spent 100 quid on the AI tool, and it paid for itself 100 times over in the first year. The third strategy is something most people don't talk about at all, and it's using AI to manage your tax-free allowances. The UK gives you a ton of tax-free allowances if you know how to use them, and most people just leave them on the table like they're paying extra for no reason. For instance, you've got a trading allowance of £1,000. If you're earning under £50,000, you can claim this without even having a registered business. That's 1 grand of income completely tax-free. Most people don't even know this exists. Then if you're claiming property allowance because you're working from home, that's another 1 grand. So that's 2 grand right there in allowances that just disappear if you don't claim them properly. The investment allowance is even better. If you're freelancer investing in kit for your business, like a new computer, software, equipment, the first £25,000 is completely tax-free under the IIA. Some of you are going to miss that because you didn't know you could claim it. The AI tools now track all of these for you automatically. They flag when you're about to waste an allowance. They remind you to claim things before the tax year ends. And they basically do the work of a human accountant, but faster and more accurately. I know a photographer called Rebecca, right? She was spending about $3,000 a year on camera equipment and backup systems. She wasn't claiming the allowance properly, so she was paying tax on revenue that should have been completely offset. We ran her through an AI system, properly configured her asset claims under the IA, and found she could retroactively claim about $1,000 in allowances she'd missed. With our setup, she'll save about 500 quid a year going forward. That's 500 quid, because she knows to use the tools properly. The fourth strategy is using AI to audit yourself before AMRC audits you. Sounds scary, but it's actually the most profitable thing you can do. The reason is simple. If you make a mistake on your tax return, AMRC will find it eventually, and they'll charge you penalties and interest. That can be brutal, but if you find it yourself and correct it before you file, there's no penalty. AI tools now exist that can analyze your tax return before you submit it and compare it against your actual income and expenses to find discrepancy. Some of them even use machine learning to identify patterns that MRC considers high risk. Here's a real example. One freelancer I know, David, he's doing about 60 grand a year in revenue as a consultant. He submitted a tax return with £120,000 in claimed expenses. Now, that's obviously way too high, and MRC would have come after him. But an AI audit tool flagged it before submission and asked him to verify. Turned out he'd miscategorized some personal expenses as business. The tool helped him reclassify them correctly, and he actually still saved money compared to his original submission because he was properly claiming some business expenses he'd forgotten about. The point here is that an AI self-audit takes like 20 minutes and costs nothing, or about 50 quid maximum. And it could save you thousands in penalties if MRC were to look at your return. That's a no-brainer decision in my opinion. Now let me actually walk you through a live calculator, because numbers are easier to understand when you see them working. I'm going to use a freelancer called Tom as the example. Tom's a freelance content strategist, earning £65,000 annually. He's been a sole trader. He's paying a traditional accountant about 600 quid a year, and he's not optimizing anything. I'm going to open up an AI tax calculator now, and I'm going to input Tom's information. Revenue is 65 grand. He claims 8,000 in expenses currently. He pays his accountant 600 quid, which is actually deductible, so that comes out of expenses. His national insurance contributions, let's calculate those. At 65 grand with 8 grand in claims, his net profit is 57 grand. Under the sole trader model, he's paying income tax at 20% on everything over the personal allowance. So that's about 9 grand. National insurance is about 5 grand. Total tax and contributions are 14 grand. He keeps about 47 grand. His effective tax rate is about 22% of his revenue. Now let's run the same situation through a limited company scenario. He takes a salary of 12 grand. That's covered by his personal allowance, so no income tax. His remaining 53 grand is taken as dividends. The company pays corporation tax at 19% on the profits. Actually, hold on. Let me back up. The company needs to pay corporation tax on the net profit after his salary. So net profit is 65 minus 8 in expenses minus 12 in salary. That's 45 grand. Corporation tax at 19% on that is about 8.5 grand. The company has 36.5 grand left. He takes this as dividends. Dividends are taxed at 8.5%, so he pays about 3 grand in personal tax on the dividend. Total tax to the company, and to him personally, is about 11.5 grand. He keeps about 51.5 grand. His effective tax rate is about 17.5%. The difference. In the limited company scenario, Tom keeps about $4,500 more annually. That $4,500. And this is exactly the kind of calculation that AI tools can now do in literally 60 seconds. I want to show you one more thing, because I think this seals the deal. Let's say Tom is actually making £120,000 a year, not 65. The benefits of being a limited company now become absolutely massive. He could save between £6,000 and £9,000 a year just by structuring correctly. That's life-changing money. The reason I'm showing you this is because these calculations take about an hour if you do them manually or work with a traditional accountant. But with AI tools, they take seconds, and the tools will do them continuously throughout the year, adjusting as your circumstances change. That's the power of automation. So here's what you need to do today if you want to actually capture these savings. First, go to taxfile.com or similar platforms and run a free AI tax assessment. Takes about 20 minutes, costs nothing. It'll show you exactly how much you're likely overpaying. Second, subscribe to an AI integrated accountancy platform. Freelancer is fantastic. Xero has great AI features. Wave is free if you're starting out. These will automate everything we've talked about. Third, I want you to actually use the expense categorization tools we discussed. Receipt Bank or built-in features in your accountancy software. Photograph every receipt for the next 3 months and see what you've been missing. Fourth, if you're earning above $50,000, run the limited company calculation. It's not scary, it's just maths, and the tools make it obvious. Most importantly, engage with an accountant who actually uses this AI. They exist, they're out there, and they're the future. The old spreadsheet accountants are on their way out, and the ones embracing AI are 10 times more valuable. Right, so your action step, Dajin. Go to the link in the description right now. I've set up a calculator that does exactly what we walked through today for your specific numbers. It's free. It takes 5 minutes, and at the end, it'll tell you exactly how much you could be saving. Then subscribe because I'm putting out new tax hacks every week. And honestly, the next one might save you another $1,000. You've got this. Let's go.